Welcome to The Explainer. Today, we're going to crack open Snap's latest quarterly report. We're going way beyond the headlines to uncover this really interesting story of massive growth, but also this persistent unprofitability and some pretty big legal risks that could really shape its future. So, let's get right into it.
Okay, so let's just dive right into the core question for Snap and, for its investors. They have this absolutely huge global audience, but does that audience actually translate into profit? Let's look at the three big numbers that tell the real story here. First up, just a massive and still growing user base, 477 million daily active users. For a platform this big, growing 8% from last year, that's pretty darn impressive.
And then, look at the revenue. We're talking over $1.5 billion in just 3 months. That's a solid 10% jump, so they're clearly getting better at making money from all those eyeballs.
But, and this is the big but, here's the twist. Even with all that cash pouring in, they still posted a net loss of over $103 million. So, more money coming in, sure, but even more money is going out. And that's the puzzle we're going to unpack.
So, let's start with Section 1, Snap's report card. Let's kind of grade their performance this quarter and put all those numbers into some real context.
The most important point is this. Things are moving in the right direction. The loss is way smaller than the $153 million loss from last year. But the company is still in the red, and that path to actually being profitable, well, it is not a straight line.
Next up, Section 2, the user growth engine. So where are all these new users even coming from? The answer, it turns out, reveals Snap's biggest opportunity and, well, its biggest challenge.
So in North America, this is where Snap makes the most money per user. The base has kind of hit a ceiling, and it's even dipped a little. This is their most important market, so seeing the numbers tick down from 101 million, yeah, that's something to watch closely.
And over in Europe, it's kind of a similar story. The numbers are holding steady, growing a tiny bit, hitting that 100 million user mark. But we're not talking about explosive growth here. It's more of a slow, steady crawl.
But just look at this rest of world category. This is the engine room. That chart shows a 15% surge year over year, all the way up to 280 million daily users. This is where almost all of Snap's growth is coming from.
And that right there, that perfectly lays out the company's central puzzle. How do you make more money from the audience that's growing the fastest, but where each user brings in way less cash than someone in North America? Cracking that code is absolutely key to their future.
Okay, so we've seen all the money coming in. Now let's follow the money going out. With over $1.6 billion in expenses this quarter, where is all of that cash actually going?
So the biggest piece of the pie, at a whopping 41%, is something called cost of revenue. A giant chunk of this is payments for stuff like cloud hosting, basically the rent they have to pay just to keep the lights on for the app. The rest is split between R&D, sales, and all those admin costs.
Now, hidden inside those expenses is this term you need to know, stock-based compensation. It's a huge cost for Snap, over $250 million this quarter alone. Now, it's a non-cash expense, so no money is actually leaving their bank account, but it does water down the value for everybody else who owns the stock.
Okay, let's go back to that cost of revenue for a second, because this is a really critical point. Snap doesn't own its own servers. It relies almost completely on other tech giants, and some of them are its direct competitors, to host its service. This creates a really fundamental dependency.
And now, my favorite part of any corporate filing, the risk factors. This is the section where the company legally has to tell investors everything that could possibly go wrong. It's basically a list of what keeps the leadership team up at night.
First up, control. And this is pretty wild. Because of a special kind of share, the two co-founders have nearly all of the voting power. That means for any big decision, whatever they say goes. Public investors have basically no say at all.
This quote right here spells out that dependency we were just talking about. Snap's entire service is built on infrastructure owned by its potential competitors. So if Google or Amazon decided to jack up prices, or if their service just went down, it could paralyze Snapchat.
And then there are the legal problems. The company is very upfront that it's facing a ton of lawsuits. And the main argument is that the platform is designed to be addictive and is causing mental health issues, especially for its youngest users.
And it's not just private lawsuits either. The government is starting to take a close look. The Federal Trade Commission in the U.S. has specifically opened an investigation into Snap's new My AI feature, looking into its potential risks for those same young users.
So,
After looking at the user numbers, the financials, the big risks, what does it all mean? What is the big takeaway for Snap going forward?
Well, when you put it all together, here's the situation. The user growth story is fantastic, but it's happening in places that are just harder to make money from. Revenue is climbing and the losses are getting smaller, but actually breaking into the black is still a huge challenge. And all of this is happening while the business has to rely on its competitors to even function, and it's facing this growing mountain of legal pressure over user safety.
And that leaves us with the ultimate question. Snap has always been this incredibly innovative company, right? They're constantly reinventing what a social app can even be. But with costs rising and these really serious external pressures, the race is on. Can that spirit of innovation finally deliver a profit before all these other challenges become too much to handle? I guess that's what the next few quarters are going to tell us.